What's up, guys? What's going on? It's your boy, Mr. Ford, Mr. Cosmic, the Cosmic Training Academy. Live. I'm actually in Bali right now, taking a break, and thought I'd talk to you guys about this whole choppy um, stock market. And if you're suffering and took a little loss, you're not alone. That's just the way the market is. If you've been trading one strategy for quite a while, like myself, and then the market starts doing this weird thing, sideways thing, or chopping up and down, you don't know the direction. That's when you can really lose money. What I want to tell you guys right now is to be careful. Don't revenge trade. Don't go back and try to double down and go the same direction. Stop for a minute, sit on your hands, watch the market, hold your money. Don't try to trade, don't try to guess and estimate which direction the market is going to go because you'll never guess it. You're not going to know. Okay? So don't do it to yourself. Don't mess up your money, don't mess up your income. Okay? Um, the next thing I want to tell you guys is I just figured out how to share a screen. So, yeah, bear with me. It's just crazy that I never knew. Um, that. Yeah. Oops. Let's say, should I see it? Yeah. Right. Yeah. So anyway, guys, yeah, I'm gonna try to share. Oh, okay. Should I share tabs? So, um, okay. I guess I can only share one tab at a time. So, oh well, we'll start with this tab. Why not, guys? Why not? Okay. Hopefully that worked. Y'all see that? Let me see if I switch to this one. What'll happen? Okay, you won't see that one. Okay, let's start here. So, okay, if you're new to my channel, welcome. It's Cosmic Training Academy, where we train, travel, and we trade. So, right now I'm live from Bali. Um, just wanted to come in here and talk about this 2024. This is August. And just want to show you guys some things if you're new to trading or if you're just trying to figure out which direction to go with the market. Let's just look at it. Let's just get a brief look. Number one is today. It's the 5 days. Let's go to the last 5 days. Take a look. Okay, so we can see right then and there what SPY has done. You can see where it took that big leap right here and it started going back in this direction, going up. It's August the 12th, all the way back. Let's go to the whole month. You can see this is where it started this dip, July 31st. Boom. From 550, actually, if you really want to look at it in the month, from 564 all the way down to about a $50 loss, right? Okay, so if you were trading that um, this index, this ETF wouldn't go too far down, which is a lot what I trade a lot of times, then you got hit real bad. And that's exactly what happened to me. I got hit. I usually keep it keep it really far away, which is what I'm going to tell you guys about today. Because you're never going to know when the market's going to do something weird, especially during times like this. So you have to be ready that it might. Okay. So if you're trading options, then you have to be ready that it might go, all the way down or all the way up. You don't know what it's going to do. Generally speaking, what does SPY do? If we look at the last 2 years, we can see this 2 year I just hit. Um, well, we're not going to see anything because it's not showing anything right now. Maybe we'll go to 1 year. I see. Okay. See what I'm saying? So if you're an options trader, what would you be trading? You obviously be trading anything that is going that either is bullish, where the SPY is going in an upward direction all the time, so that you can benefit from that upward trend, or you'll be trading against the bearish trend, which is still bullish, right? So, or at least a sideways. you know, so whatever strategy that is basically sideways or against um, bullish trend, then you have a high probability of success. Okay, so there you have it. Let's throw in some indicators for good measure. What's some good indicators? Some people use Bollinger Bands. You know, I'm not a big Bollinger Band user, but a lot of traders really are. So I'm just going to do it just for right now so you can see. So if you're into swing trading or day trading, you might be interested in using the Bollinger Band and using it to test direction. So as you can see, where the Bollinger Band hit the bottom, where price action hit the bottom of this Bollinger Band, what did it do? It bounced off of it. When it hit the Bollinger Band, what did it do? It bounced off of it. When it got to the top, it still went a little bit higher and then came down, touched the middle, then went back up. So the thing is, this is what I'm saying about indicators to me, is why I don't use these indicators that much. Not this kind of indicator anyway, is because just because it touched the top of a Bollinger Band doesn't stop it from going even higher. You see what I'm saying? So I'm not knocking anybody who uses it. I'm just telling the people who are interested in it what stops price action from continuing to go upward. Nothing. Just because it touched the top of a Bollinger Band does not mean it's going to bounce off of it and go south. That's not a guarantee. So that's why I say if you base all your trading off of an indicator, you could be in some big trouble, right? Okay, so forget about the Bollinger Band. I'll, let's go to RSI. Done. Okay, so if we wanted to look at the RSI, which is down here, which is 820 is the low of the RSI, relative strength index, if you didn't know what that is. And 80 is the high end, right? Okay, so we should move this. Why is this in the way? Oh, it's moving to the, oh, you can move to the top of the screen or bottom. I can tell you, I don't hardly even go on Yahoo Finance that much. But anyway, can I move it or is it going to make it disappear? So anyway, if you're looking at the, I don't know why they have it on the full covering of the whole RSI. So let's go to a bigger screen, 5 days. Okay, so here we go. RSI, typically what we're looking for is RSI to hit down here on the 20 range and look for a reverse. As you can see, it hasn't done that a lot. Going one day, maybe it'll help us get a better view. So we're looking for it to bounce off of the 20. Here it is. That's the 20 right there line. Every time it bounces off the 20, in theory, it's supposed to go back up. Here's the 20. It hit the 20. Did it go back up? Yeah, it did. Went back up. It didn't even get down to the 20 on this one. So basically, you're not going to use one indicator to make a decision on anything because you didn't hit a 20 into it right here again. And it didn't immediately go back up. It actually went lower. Action price action actually went lower. And look at the relative strength index compared to right here. Here it hit it, and then here it didn't hit it, but yet still here is it's at 542, and here where it didn't hit 542.76 with this right here 543.03. So it actually went lower, and it didn't even touch right here. You see that? So again, guys, what I'm trying to tell y'all is that you cannot rely solely on the relative strength index. You can't rely solely on the Bollinger Band. So if you're basing your trades, you probably have learned by now, and if you haven't, then you're delusional, that you cannot base your trades off of any kind of indicator. Okay. Especially not one. You have to at least have two or three. That's why when you see people's screens, they have all of this stuff on it. You're like, oh man, that's so crazy. I don't need all of that. I just need one. And how's that working out for you? Okay, maybe you might get one or two or three or four good trades out of that, but that's not a guarantee. And you know that. And at the end of the day, you're going to have one, two, or three bad trades out of that. The question is, How much do you win and how much do you lose will determine whether you're a successful trader or not. And that's not a good recipe to be a great trader, because the reality is that you don't make the same unless you do this one thing that a lot of people don't talk about. Unless your trades are exactly the same amount every single time. If you're trading a $100 every day and you get out every day at 10% loss, and you get out every day at a 50% or 60% gain, then you will almost always end up being a profitable trader. But is that what people do? No. They trade $1,000 today, $200 tomorrow, $600 Thursday, 500 on Friday. You see what I'm saying? They take a 10% loss on the $1,000, which ends up being 100. They take a gain on the $200, which ends up being 100. You see what I'm saying? So you can't break. You see what I'm so the only way you can guarantee almost with a really high probability of success is if you trade the same amount every time. You get out at 10% loss and you take a profit at a 60% gain or higher only. Now, that's your answer right there. If you can do that, if you can stick to that discipline, then you will be a profitable trader. The reality is that market don't always make you feel comfortable to do that. You have to be, but most traders, 99.9% traders will never trade that way because opportunities just don't present themselves that way, and they don't have the discipline to stay at a price point. If $1,000 is your price point, you wanted to trade that every single day, and you got out every single day if it fell down $100, and you closed it every single day if it went up 500, you can be a very profitable trader. Okay, let's get back to the story. Let's get back to the SPY. Um, why is SPY good? Because it's a exchange traded fund. It's covering 500 of the top stocks. If you didn't know that already. That's just for newbies. I like to throw some stuff in there. Okay, let's look at another indicator since we're talking about stuff. Um, so what I like to do, what I like to do, I've done so many of these indicators. I can tell you this is. Look at this. I've never seen the chopping this index. I shouldn't even look at it because I have never dealt with it before. Look at that. Interesting. I'm gonna leave that on the screen for actually I'm not because I don't want y'all to. I'm gonna just show y'all moving average. Here you go. This one, let's put so auto. Okay, this is a 50 moving average. Let's make it, yeah, 50 is fine. That's one. So moving average is okay, but I like a 200 moving average. Let's put a 200 moving on there. Here you go. 200 moving average. It's a simple moving average. Let's change the color. I always love them to be blue. For my 200. And okay, now, and then if you're gonna do it, always at the very least you want to do a 200 and a 21, 21. I'll just say 21. But in this particular case, I'm just gonna show you a little what all three of these, and then we'll take out one, and we can show you how that works too. Um, how will yellow show up? I don't know if yellow's going to show up very well on the screen. Let's do a black. Yeah, let's do a black. Where is that? Okay, so the black, and let's do it on a 20, 20 moving average, right? All right, now see how we got those? Hold on. Okay, let's move out the way. How y'all like that? How y'all like that? I wonder, can I increase the screen? Make the screen take up the whole screen. Wish I could. At any rate, so now what do we have here, y'all? We got the 200 right here, as it's marked. You got the 50 right here, and you got the 20 right here. And then we have price action right here. Now, very, very important. I want y'all to learn something. Pay attention. Now, if you want to try to figure out what price is going to do, you're going to be looking for the price and relative to where it's at above or below the 200. Okay, where is price relative to the 200? And let's just take this case right here. And actually, I don't even want to do. I want to do 1 month because that way you can have a better view. And I hope it stays on there. It doesn't give us. So with this example, I'm going to show you guys how, if you're patient enough and you pay attention, and you have sometimes if you put alerts on, you'll be able to catch these moves and monetize on these moves alone. Doesn't seem what happened here. Are we getting anything? 1 month is like this. I don't like that. Let's go with this. Okay. Again, this price action. We can look in the last 5 days. Where would you have made money? Okay. Number one, all of this area, price action is above the 200. There's the 200 right there. So what happens when price action is above the 200? Anytime price action is above 200, we're looking for a buy. Okay. We're looking for a buy automatically. If price is below the 200, you never, ever, ever sell. Y'all read me? Never sell. Price action is below the 200 ever. Okay. All right. So now also here's the 50. Another thing we're looking for not only the price action to be above 200, we're looking for the 50 to be above the 200. Okay. All in this whole case, the 50 is right above the 200. So we know we're going in an upward direction, bullish trend. Okay. Now, what we're also waiting for is for the 20 to be above the 50, right? Then we know we're going to make some real live money, y'all. Okay. So this is what you see. Okay, 50 is sorry is the red one, and the 20 is the black one. That's so whenever you see a cross, and I really want to go back to where I can see more time. I don't know why it's doing this. At any rate, there's a 200. Everything's above 200, so you know it's about. Here is the 50. Here's a cross. You do a purchase, buy right here. You jump in as soon as you saw this cross right here. And what happened with price point? Look at price action. You touched it. It didn't go through the 20. It kept going up, 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 up. You see that? Once it crossed, this is where you caught that buy. You did that buy right there because you knew you was in buy zone. Because why? Because price action. Where else was what was the 50 at? 50 was above the 200 as well. Price action was above the 50 and the 200 and above the 20. This is a buy, y'all. This is a buy. I don't, and listen, I am looking back, but it doesn't make a difference. It's going to be the same way. So you see where it touched 20, bounced off of, and never crossed through 20. You still stay in the trade. You 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 stay in the trade. Up, close. All of that would have been profit. As soon as you saw it cross through that 20, close. So from where it crossed right here, when you got into that trade, you would have had the difference between if you're buying an option like a call, you would have had a different 516 right there, all the way up to where 543. That's a hell of a move, y'all. That's a hell of a move. And you don't play around, you don't wait, you don't hesitate, you don't think about it, you don't hope, you don't throw no salt over your shoulder, you do not do anything but close. The moment it crosses through that 20, you're done. Why? Because even though Many traders gonna say, well, it might come back. Yeah, it did come back temporarily. That's when you got trapped. Boom. What happened? Fall. Then it fell through the 50. Then people say, oh no, it's gonna come back. It's gonna come back. Boom. It touched the 20, trapped again. Fell all the way through. All you do is like that all your profits. This is why you gotta close when it crosses through that 20, and don't hesitate. Don't think about it. Don't estimate. Don't hope. Don't pray. Don't wish. Nothing. Close. Okay. So the reason why this one is I'm gonna get, let's look at something that's more tricky. Let's look at a Tesla, just to give you guys an example. Now, this is game, y'all. This is experience. Okay, okay. I can make this bigger. There we go. That's a little bit better. Um, okay, so they gave me my plots on Tesla too. Okay, so here we go. This is 3 months. What do we say? 200 is that? 200 is above price action. What are we looking for when 200 is above price action? Sell. We never buy when price action is below the 200. Don't look to try to get no big, huge move. None of that shit. You sell when price action is below the 200. You buy when price action is above the 200, guys. Come on now. Pay attention. So here's the 200. We're always in sell mode until price action crosses above the 200. Oh, there it is right there. There's when the price action went above 200. Now we start to put our mind frame is we're looking for a buy. But we're not going to buy just because price action is above 200. We're looking for a verification. What's the verification? 50. People going to say, well, you missed all of this. Miss it. Trust me. Because that's how you get trapped and you lose your money. Don't go off of just the price action crossing the 200. That's not enough. Then here's and I haven't looked at any of this stuff, guys. I didn't prepare for this. I'm just doing this off the cuff. Um, excuse me. So when the 50 did not cross, so in this case, let's just see 200 right here. The, the 20 crossed over 200. That's not enough. We're looking for the 50 to cross over 200. This is the only place where you would have took your buy right here. People say you missed out on all of this. You gotta miss that. You got to take that miss because the thing is, if you don't, you can get yourself in some big trouble. Okay, so here we are. 20 already left us. The price already went above 200. Then the 20 went above 200, and what we're looking for our last confirmation, the 50 went above 200. You could buy right now. Depends on you. Personally, um, I typically will do without the 50. But if you're very conservative and you're very risk averse, then you add the 50. Me, I look for just the 20 and the 200. This is my favorite setup. 20 and the 200. See, so when price action crossed over the 200, you're looking for a buy. And as soon as 20 crossed over the 200 and price action was above the 20, that's when I would have took my buy right there. There it is right there. Boom. So you made money right here, and you would have made money up to here. And if it started to come back, you will close when it's about to cross over 20. Boom. Would you have made money in this one? Mm, probably not that much money, if any at all. So, but that's where you take trades at. You know, what you could do is you put in your stop loss. If you don't, what you do is you put in the stop loss to make sure that you don't get this far back down. So you can always put in your stop loss right above here, and then that way, hey, you know, right here was 242 is where you would have took that trade. So actually, you would have took that trade probably, yeah, your next move. Um, let's just say, this is spread out, so um, yeah, So you would took your purchase right as soon as it crossed, boom, and then you would have rolled it, put in your stop loss above your where you purchased it, not below it, above. That way you always in profit. You never put your stop loss below where you took your position because you can do that all day long and keep losing money. Always put your stop loss as soon as you take position, put it at break even. Okay, it's better to have to put the position on over and over and over again than to be taking losses. Okay, put your stop loss in as soon as you take position, and and you can also do a trailing stop where it follows you up. And in that way, when it starts to do a pullback like it did right here, you close. Okay, so it depends on how close you put your trailing stop. That'll be up to you. Okay, guys. So that's that. All right. So just remember 200 got crossed by the 20. Take your trade, boom, right there. Put it in your stop loss, boom, right there. Take your profit, boom, 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 boom. Once it starts to retrace back, close. Anywhere in between here and where you took the trade here, you're gonna close it so that you can be in profit. Let's take another example. Let's see if the day on Tesla might do good. See if we can get anything on the day of Tesla. We can go to another one. Doesn't make a difference to me. 2 over 20 is the same thing every single time. Guys, that's the same thing every single time. Let's take this forward. Shit. I act like I'm scared to tell y'all about it. I'm not scared. This is why I have a mentorship program where I can show you and help you. And we're not even talking about options right now. I'm just taking trades. I actually changed the title of this video. How to trade off the EMA 220 and the 20 EMA. Okay, Ford, what are you doing? This is a day. This is a month. 5 days. That looks interesting. Okay, I don't know why 1 month looks like that. But anyway, here's another example, guys. It's not that hard. It ain't that hard to tell. Here's the 200 right here. Like it got cut off. But anyway, here's your 20. And what are we looking for? First thing we're doing is we're looking for price action relative to the 200 moving average. So what is price action? Here's the 200. Where's price action at? Right here, the 200 is above. Okay. Now, what are we looking for? We're looking for price action above the 200 and above the 20. And we're in the 20 cross. Here's the cross right here. What do? We got in. Okay. As soon as we see the cross and as soon as price is above two, we would have got in. Now, in this particular case, as soon as it came back down, we would have closed. We would have closed right there. But as soon as it crossed back above, boom, we would have took it. We would have took it. Okay. As soon as it got above, especially if we look back and we saw it crossing above this point right here, the last high. That was the last high. You probably would have took your trade right at the last high. Boom, got in here, right there. We took it for a ride. What do you do right here at the last high? You got in, you put your stop loss in right there. Don't forget to put your stop loss in. Let me see if I can think. Go ahead and let me draw anything. Doesn't seem like maybe let me draw anything. Draw. Now, man, I don't see no drawing. Anyway, so yeah, so that was our last high right there. Price action is above the 200. There's the 200. 20 just crossed above the 200, and price action is above the 20. It touched back down, boom, we closed. We waited for price action to go above the 20 again. It did. We looked back and saw that, hey, oh wait a minute, this was our last high. We waited for it to come across to above that last high, boom, we crossed the last high. That was our entry. We put in a stop loss right there at our entry and actually above our entry so that we at least make some kind of profit. Being break even is not a profit. Okay. We also got broker fees. So depending on your broker. So we don't want to break even. We want, I don't care, 2 penny, 3 penny, 5 cent, 10 cent, anything, $1 above your entry. Okay. Um, so as soon as you got in, put in your stop loss, it went up. Okay. Where did it go? Boom. It went up. We're looking over to the right. What did it do? It went up to 4, all the way up, and it didn't start pulling back until we put a stop loss. So we actually put a trailing stop in. If you want to, you can put one in for. This is such a Ford is at $3 right now. It's crazy. Oh, forward. Oh, yeah. Oh, that's the Forward Industry. Oh, I thought we was on Ford. I'm sorry, y'all. This is Forward Industries, not Ford. I'm like, wait a minute, where's Ford's price at? So anyway, Forward Industry. I'm not how to even look at this. So yeah, okay. Um, I got Ford LSC so low. But anyway, yeah, so then you put your trailing stop in. Boom, as soon as it hit that, it never went back down here. You don't wait till it gets back down to here. You already closed it out by the time it came back down off your trailing stop. I don't care if you put it in for whatever percentage you want your trailing stop to be, but keep it tight. So you don't want it so tight that it don't breathe. You want it tight enough where you can make money, where it can pull back a little bit and then go back up. This is where knowing your stock is better than just trading all around anywhere, right? So what you don't want to do is you want to just trade anything. You want to trade things that you're familiar with. Okay. So here's Ford. I'm sorry about that, guys. I was like, wait a minute, I never seen Ford that low. But so yeah, another example. Let's look at the real Ford. Where's price action here? Let's start on the left side. Or August the 9th. Um, Price action was above the 200, right? And we're looking for a cross. Okay, here the 20 was above. If you came in, you saw this, you would have been saying, okay, but this is where price was already at. You don't make no move because it's already above the 20 is above the 200. The price action is above the 20. There's no room to buy unless you want to wait till price action come and bounce off 20. You can do a buy, or price action is about to cross through the 20. You can do a buy here. If you see price action coming through, boom, buy. But you got to put a stop loss right in there. And then as soon as you get up here, a trailing stop, and it come get up here and it pull back, it'll close. It's not a lot of room, but it'll be small profits. Okay. But what you're looking for is since it's already up there, you're looking for this right here. This is what you want. You're looking for a sell. What do we do when the 20 is crossing through the 200? That's the sell. But we don't sell until what? Price action is also below. Usually price action beats you to it. It's usually not following because remember, that indicators are basically copying what the market is already showing you, what the market has already done. It's usually lagging. Okay. So price action usually already made that move, but you don't make no move until it's confirmed by the indicator, which is the 20 right here. So as soon as that 20 crossed through there and price action is already below, boom, get in. You get in somewhere around here. Boom, get in. For what? A sale. Okay. What did you do? You call all of this coming down. You call all of this, all of this, all of this, all of this. 20 went through price action, all of this, you know. And actually, to be honest, if you really wanted to do, depending on where 2020 was at, you probably didn't. 20 was already there. Okay, excuse me, price action was already below. Um, so yeah, you could have just bought the sale, and you would have made money. see here, you wouldn't have made money right there. You wouldn't have made money until you jumped in where price action crossed through the 20 going this direction. That's where you would have made. This is where you would have got in right here. I apologize. You wouldn't have got in right here because price action would have beat you to it already. Okay, so price action would have been down here by the time it crossed, so it was already low. What you're looking for is for that break into price action. So here it came, it crossed above the 20, and as soon as it crossed through there, you would have gotten it. It touched the 20, but it didn't go through, so you're still in. You would have made money from here, which is $9.92. Looking over to your right, $9.92. You would have took that sale. It still didn't cross through. Going down some more, $9.89. It still didn't cross through. It came right here, $9.90. You stay in position. Boom, boom, boom. Put it in this. You got your stop, your trailing stop in, right? Still didn't cross through. $9.89. Falling down some more. This is where it would have crossed. You probably would have closed right here. 9.89. Would you have missed this other stuff? Yeah. Unless you jump back in position again. Especially when you look back here, you saw that it crossed past through that lower loop. You might have jumped back in right here and did another sale. If you were smart, that's what you would have done. If you look back at these last backwards, and you just say, "Oh shit! If it crossed back through there, if it drops below those, I'm gonna take a sale." And then that's when you would have took your sale again, right there, and it would have came back up, touched, didn't go through, fell down, and depending on where your trailing stop is, you would have made money. Just keep it tight. Keep your trailing stop with enough room so that way you can make some money, but you don't want to lose. You don't want to trail back up and then stop right where you just got in at either. So in this particular case, I'm not sure where you put your trailing stop in, probably within 5 cents, give or take. So if you got in here, the moment it got down, probably you would have just been trailing on down, regardless, whatever. Okay, guys. So that's just an example of how you use the 2200 moving average with the 20 moving average, and you just get in positions and you get out of positions. Okay, so I hope that helps you guys. This is what I teach with my mentor program on www.cosmictrainingacademy.com. Go check it out. Purchase the training. I'm here. I'm helping people. I'm going to sit down with you virtually and we're going to walk through the whole thing live. And literally, the class is just really so cheap. I've been trading almost 10 years and really I'm giving a really good value for the money. It's because I'm basically on vacation time, so I can train you and teach you and show you. And I got an hour, or two, or three where I'll walk you through it. It's part of the program, and you can ask me whatever questions you want to ask me, and I'll help you to get through so that you can become a more profitable trader. Okay. All right, guys. Well, I'll probably on my next video, I'm gonna get on Robinhood and use that and show you guys how I take options trades. Okay. Um, and in this particular time, I wish y'all all the best with 38 minutes in and Mr. Cosmic, Mr. Cosmic Trading Academy. Here, let me put this up. Let me see for you guys so you know that it's my page. Oh, shoot. I thought I had it right here. But anyway, oh yeah, here it is. Yeah, so I'm going to show you what the page looks like. And um, where's this? So there you go. So I didn't know it right there already. But yeah, I'm going to check that out to get you a course. Right now we have a discount and you get the Candlestick Trading book. And you could always hit me up on the email, Cosmic Trading Academy, Trading Academy at gmail.com, and pick up the class if you, and we'll go from there. Okay, guys. I wish y'all all the best trading luck and skill. And if you need anything, I'm around. I'll holler at you guys later. Thanks a lot. Like and subscribe. Share it with one of your friends if you found value. And I'll check you guys later.